DoubleLine's chief investor issues dire warning. Severe recession looms as Fed contemplates drastic interest rate cut. As storm clouds gather on the economic horizon, DoubleLine Capital's chief investment officer, Jeffrey Sherman, has sounded the alarm, predicting a severe recession for the U.S. economy. With an embattled Federal Reserve trying to mitigate the impending fallout, Sherman anticipates a drastic move, a whole percentage point interest rate cut. In an exclusive interview with Bloomberg, Sherman expressed his concerns, stating, "A multitude of economic indicators we look at are flashing either warning or recessionary signals." Among the warning signs, he highlighted the inverted yield curve, a reliable predictor of past recessions. The current situation shows short-dated US Treasuries yielding more than long-dated ones, indicating investors' expectations of rate cuts in the coming years, a move often taken by the central bank during economic downturns. According to Sherman, the bond market is unequivocally signaling that the Fed has tightened the reins too much, leaving them with no choice but to reduce rates. He expects policymakers to act cautiously at first but eventually resort to an unprecedented 100 basis point cut to jolt the economy out of the impending doldrums. Concerning the timeline, Sherman believes that the recession is likely to strike within the next 12 to 18 months. To hedge against the uncertain future, he has shifted investments towards long-dated government bonds and opted for shorter maturity, investment-grade corporate bonds, which offer attractive yields and, in his view, pose minimal risk of immediate defaults. Despite his cautious outlook on corporate bonds, Sherman issued a warning about an increasing number of companies struggling to repay their variable-rate loans. The Fed's consecutive rate hikes from near-zero levels to over 5% since the previous spring have taken their toll, and if this trend persists, it could serve as a foreboding sign of an impending recession. The dire forecast is not exclusive to Jeffrey Sherman at DoubleLine. The firm's renowned CEO, Jeffrey Gundlach, famously known as the Bond King, has echoed similar concerns for months. He has predicted stock market turmoil, a wave of loan defaults, stubborn inflation, and significant rate cuts by the Federal Reserve, adding to the mounting sense of uncertainty. As the global economy holds its breath, eyes are firmly fixed on the Federal Reserve's next move, hoping it will stave off the impending economic storm. Yet, with recessionary signals becoming more pronounced, the path forward remains uncertain, leaving investors and policymakers on high alert. Only time will tell if their measures can mitigate the inevitable challenges ahead.